Okay, dear student, this is your trainer Mustafa Mirchawala from Mirchawala Sub of Accountancy, and today's our second revision day. And our objective of today's class is the current issue. If you have seen the recent document of ACCA about this course outline, a slight changes in course outline, so they have written this climate change. They have written this climate change current issue in it, and in front of your screen, I have opened the real article written by ACCA team, right? So it's the ACCA article team, so you can, it's very relevant for you guys. Okay, so objective is not to read each and everything. I'll give you the highlights of this, what is going to become in the exam. Yes, this is very hot issue right now. Even in Europe, everywhere, this reporting is nowadays, many companies following such reportings. Okay, so now first thing, we can see there is a change in climate on this planet. You can see change in climate, and because of this, we have seen extraordinary heat waves, extraordinary low temperatures, extraordinary high temperature, extraordinary rains, or extraordinary shortfall of rains, right? Because of this, we have seen impact on many businesses, and because of this, as the business is impacting, so obviously the financial statement will get the impact as well. So these things are also relevant for us nowadays, on businesses. Like if you see United States, I can quote you the example of Dallas right now. I can tell you about this last 2 months, extreme heat wave, extraordinary level of heat wave is there, and there is no rain. Even their grass, the color of their grass changed. And government has officially announced that no need to give water to the grass, because they are already running short of water. This what I'm talking about, USA, not any developing country. So the council has already announced not to give water because they are running short of water. So people are not taking care of their gardens, because they know that they need to put a new garden in the next season. So now just think, when they are not taking care of their garden, so what about the incomes of gardeners? What about the lawn moving business? This is a very super hit business in United States and in many countries. What about the fertilizer business? Just think. And many other businesses connected to this gardening thing are also affected. Okay, so because of this climate change, we have seen many changes. Second example, in United States, there are some states where the temperatures are extraordinary low, like in Chicago. It's a normal habit of people to change tires 2 times in a year, right? For summer, they use different types of tires, and for winter season, because of extraordinary snow, extraordinary wind, they have a different set of tires which they use for the winter. So this is the culture of those states. Okay, but if you see in Texas side, the culture is only same tire for the whole year. But now, because of this climate change, we see in Texas every year, like for 5 days or 10 days, extraordinary level snowfall, and the public is not ready for that snowfall. So now people are thinking that they might, from the next year, they might have to buy a new set of tires, like Chicago people. So see, the spending patterns are affecting, so the businesses are affecting because of this. So as an investor, a normal investor wants to know the risk associated with this climate change. So there's a need of climate reporting, climate-based reporting. Okay, now you can read this first paragraph. You can read the first para quickly. I'm not going to read it. Now, there is a word, the Paris Agreement, United Nations. This is just a word right now, not no details are given in your article. But if you search on the Google, you will find that this agreement happened in 2015, where big powers, almost all the world came to one table for the climate change discussion, right? Okay. So there were many points. They said that we'll try to reduce CO2 emissions on the planet We will work on renewable energy. Each and every country said that they will bring their own plan. In this Paris Agreement, they said, yes, they accepted that, yes, it is very difficult for developing countries to fight against this climate change. So the developed nations decided to help developing countries to fight against this change in climate, right? So these were some major points of this Paris Agreement, not relevant for your course. Now, is a legally binding international treaty on climate change, which will require significant relocation of company resources if the agreed goals are to be met, right? So when the governments have done commitment, yes, we'll work for the climate. So obviously the government will pressurize the companies. So the companies also have to fulfill the climate range. For example, if a company is above a certain size, obviously it's all related to the local law of that country. If that company is bigger than a certain size, then definitely they have to follow all these climate change rules. So that will affect their financial statement as well as the risk, as well as the cost, everything of that company. Okay. Yes. An increasing number of companies are providing narrative reporting on climate change issues. I give you a real example. Even I have the document as well. If you want, after the class, I can send Shell. We all know this brand Shell, right? It's a Netherlands company, and they are doing detailed reporting on climate change. I'll share their disclosure page with you, right? So where minimum legal requirements are being met, investors are calling for additional disclosures to inform their decision making. Some companies have set strategic goals such as net zero carbon neutral. Yes, even the Shell. If you see the file of Shell, they have made certain targets, like in 2025 or 2026, they will reduce 6 to 8% CO2 emission things. They will try to give up CO2 related things by 6 to 8%. By the end of 2030, this target will be achieved by 20%. By the end of 2040, they are saying we will almost 50% of the oil-based things will shut down, and by the end of 2050, 100% will shift to renewable energy. Now just think, Shell is historically oil-based company, right? But now this company is also shifting to renewable energy, renewable things, because of the climate change. See, this is a big thing. Even you can, if you read the financial statement of Shell, you know, the capex budget, the capitalization budget of Shell is higher than GDP of some small countries. It's such a big company. It's such a big company, right? Okay. Now the next thing is climate related narrative reporting requirement and expectation cover both the potential impact on the future of a business and the company's impact on the environment. Yes. How the climate is impacting the company, this we have to write, and also how we as a company impacting the climate, what we are doing for climate. Both things you have to write in the disclosure. Now, as the demand for climate related disclosure by investors and the other stakeholder increases, many companies are developing their climate governance. See, now they have proper departments for climate. The name of this is Task Force on Climate Related Financial Disclosures. Like now they have a separate team. They have a separate team who make the disclosures for climate, who work for climate accounting. Okay. Few things. Some of the information investors may require, this may come in your exam. You know, in SBR paper, this is very common. Investor aspect, you have to write according to the investor aspect. Those who have seen the past papers, those who are constantly doing the past papers, complete past papers, they know about the investor aspect thing, right? So these points are very important. This may come up as a full-fledged question in the exam. Now, the arrangements in place and the strategy the first thing, investor may ask you, what's your plan? How to fight against this climate thing, right? So this is the first point. The metrics used to monitor, if, like investor says, did you make any KPIs? Any KPIs? What are the goals which you have to achieve for climate? Please share with us. The opportunities and risks concerning to the climate. I've already told you that because of climate change, there is a big impact on many businesses. Like if you see, due to heavy rain, like in Pakistan, this time we have seen in UAE as well, extraordinary rain. UAE is a developed nation, but we have seen they were not able to fight against the extraordinary rains. We saw the floating cars in UAE, right? Some areas of UAE. So because of this extraordinary climate change, it's impacting many businesses. Like now, people have had big losses. Because of these losses, their spending patterns will be changed. Like because of heavy rains, employees can't come to the or proper office building, so they have to work remotely. So many things you can think. Now, the potential impacts on companies' profitability, net assets. Yes. These things are very important for investors. And because look at here. If you have studied, don't sleep, please. If you have studied, well, which area? APM, additional performance measures. Remember, this area is part of your course. And if you have done the exam kit, when I teach this area, I teach with two types of impairment. Normally, there are two types of impairment. The first impairment is physical damage, like because of rain. If rainwater comes in your storeroom or in your house, your furniture will got damaged and blah blah blah. These things. So these things are these are also impairment hints, and this is because of physical damage. There is one more impairment. Impairment, and that is related to future cash flows. Just because of this climate change, now the behavior of spending behaviors of people will change. And when spending behavior of people will change, or people will start leaving a certain country, or people will start accumulating in certain country, so there will be an impact on future cash flows. There will be an impact on future cash flows of certain products or certain businesses. And when future cash flows will change, for example, if future cash flows will go down, the present value of the future cash flows will also go down, and the value in use, VIU, the value in use will also go down. The value in use will also go down. So this is the second type of impairment. Both impairments are because of the climate. And yes, your impairment hits if your impairment is your expense, then it will reduce your profits, and so the net assets. Then, are the risk and opportunities reflected in the financial statement? For example, the assumptions used in impairment testing, depreciation rates. Yes, decommissioning. Obviously, just think, because of climate change, we have to use certain things extraordinary, or certain assets will be used less. So there is a change in depreciation rates. Similarly, one thing which we call is compulsory disposal cost, or decommissioning liability. Compulsory disposal cost or decommissioning liability. Okay. For example, we need to decommission a piece of land or decommission an area after 5 years. But now, because of the climate change, maybe we have to incur more cost. So yes, definitely this climate is impacting your cost and your financial statements. So all these things the investors want to know. So these points are very important. Don't neglect it. These points are very, very important. Don't neglect it when you read this article. You have this article on your accaglobal.com. Even I can share on your group as well. No, not a big deal. And it's easy. It's not an abnormal thing. Now make up your mind for such discussion. Yes, This paper is not about number crunching. Don't think like that you will always get a question on income statement, on balance sheet, on numbers. No, it's about discussion now. It's about the overall picture of the business, right? Now, climate change and IFRS. There is no single IFRS standard which address climate change. Yes, right now, till now, you have done the course. There is nothing about climate change accounting. There is nothing about, but yes, you know one thing, even I taught you this thing many times, that IFRS is basically principle based. One thing which we called rule based, you know, United States standards, US GAAP are rule based, but IFRS is principle based. They are flexible. Okay. So because of this climate change, now I'm going to teach you, there are many standards on which we will feel the effect. Because of this climate change, there are many standards on which we can see the impact. We can see the impact of the climate change. Okay. Now, the number one is IS1 presentation, please. You know, in IS1, we need to write disclosure of assumptions, because in the financial statement, there are many things which are assumption based, like calculation of fair value is assumption based. Impairment, we take future cash flows, so we take assumptions how to calculate future on what assumptions, we have calculated the future cash flows. Similarly, see the decalculation of decommissioning liability. Yes, decommissioning liability is also related to future. IS 37 provisions also related to future. So we need to disclose the assumptions as well. On what assumptions? So as because of the climate change, I just discussed, I just gave you the lecture, because of the climate change, now we need to revise the assumptions. Now we need to revise our assumptions, and as we have to revise our assumptions, so we have to disclose it in IS1. So just think, climate change is impacting IS1. One more thing, going concern. Yes, you know, we have to assess our going concern ability, that whether we'll continue or not. So I just gave you example of Dallas gardening business. So because of this extraordinary heat wave, or because of no rain for 3 months, like 2-3 months, there is a possibility that many businesses, they can't survive. Their going concern status will be in doubt. So if there is a doubt in going concern status, so yes, you need to write in under IS1 disclosures. So see, the climate change is impacting IS1. Climate change is impacting IAS1. Okay. Now, IS2, it's ready-made, very easy. You know, IS2 requires inventory should be recorded at lower of cost or NRV. So what happens normally what happens, we buy a product for 10 and we sell it for 15, because we all want profit. To be very honest. We wake up in the morning with the intention of profit making, right? So we buy things for 10 and we sell it for 15 or 20. But sometimes, because of the changes in environment or losses or damage or something, you have to sell it for 5. Okay. So sometimes your NRV goes down. So right now the topic is climate change. Yes. Can the climate change impact your NRV? Yes, for sure. How? Number one, because of rain. If rain comes in your warehouse and you have an inventory like related to paper, you are dealing in paper-based book-based business or something. So definitely your inventory will be damaged. And because of damage, the NRV will go down. Number two, because of climate change, sometimes you are not able to sell a certain product. Sometimes you are not able to sell a certain product because of climate change. So now that product will be outdated after some time, and outdated means NRV will go down. So again, this is related to IS2. Again, this is related to IAS2, my dear students. Now, IS12, let me explain you. You remember the topic unused tax losses. You know, because of unused tax losses, we create a DTA, deferred tax asset, because unused tax losses will give us future economic benefit. When we carry forward unused tax losses, we'll cut down, we will cut down our future, we'll cut down our future taxable profits. So in that way, we'll get the future economic benefit, right, from the unused tax losses. But if you remember that topic, IS 12 clearly says that we will only allow you to book deferred tax asset. We will only allow you to book deferred tax asset if there is a high probability that in future there will be a taxable profit. There is a high probable chances that you will have taxable profits. So now listen, because of climate change, your future taxable profits may convert into a loss. Your future taxable profits may convert into a loss. Yes, example, the mango production in Pakistan. This year in April and May time, there was a high heat wave. Now it's okay, comparatively better. But in April and May time in India and Pakistan, there was high extraordinary heat wave. So that impacted the mango production. So because of this, agricultural losses. Same is the case with India. I don't remember the product. Still, I read one article. In India, there was, I think, sugar shortage or some wheat issues. Something happened. India banned the export of wheat. Initially, India was exporting wheat, but they suddenly banned the exports because there were many factors. One of the factor was that because of extraordinary heat wave, the production of the wheat or sugar, I don't remember the product, was not up to the mark and was not up to the desired level of quantity, right? So yes, this climate change is impacting our future taxable profits as well. I hope you are getting the point. Now, IS 16 property, plant and equipment. This is very good. I have a very practical example on this. I read this on that document on shell disclosure. Listen, you know, because of the climate change, your residual values, one thing, and your useful life, yes, second thing, there may be an impact. And you know, IS 16, you know, residual value and useful life is a pure estimation. We all know residual value and useful life is a pure estimation going from basic. Listen, and you know, estimation depends on availability of information. Estimation depends on availability of information. So there is a new information every year. So this is the requirement of IS 16. This is the requirement of IS 16 to reestimate, remeasure the residual values and useful life at the end of each accounting period, right? This is the requirement. So now listen, because of climate change, you find a change in residual values and expected useful life. How? Example, you know, shell in Pakistan, no, wait, in normally oil companies are involved in three types of business. Look at me, all of you, look at here. First of all, oil companies extract oil, then they refine it, and then they sell it. Then they sell it. Oil marketing companies, OMCs, all oil margin companies, right? So there are normally three stages: extraction, refinery, and then finally retail business. Okay. In Pakistan, Shell is only an OMC. In Pakistan, Shell is only selling the oil final on the last side. But worldwide, in many countries, Shell is involved in three operations, all these three, like extracting oil, refinery, and then final retail. Okay. Now look at here. Look at here. Now, as the Shell, listen, as Shell has announced that by 2050, we are going to give up oil. We will no more be dealing with the products who are not environmental friendly or who create CO2 in the environment like this. Okay. So now when they announce this thing, so they need to cut down their oil related activities. So they were involved in extracting the oil. They had mines through which they used to extract the oil. So previously they had plans to work a lot, but now they have less plans. So now there is a possibility they are going to shut down their mines soon. So now this is because of this, their useful life will be revised. Because of this, their useful life and residual values will be revised. And this is written in that document. I will share with you guys if you want to read it. But again, this is about interest. Those who are interested in practical things or those who have time, they can do it, to be very honest. Next, IS 36 impairment of asset. IS 36 impairment of asset. This thing I have already told you. This is very easy. General thing. Yes, climate impact impairment. Climate has a link. Climate has a link with impairment. Yes. How? Physical damage. Because of climate, physical damage creates impairment. We all know this. Number two, climate impacts the businesses. Climates impact the patterns of people. Climates impact the purchases pattern. Climate impacts the immigration. People move from one country to another country, right? So because of this, yes, climates affect the tourism for sure. Climates affect the tourism, and because of tourism, many things got affected. You all know this. You guys are no more kids. So just because of last 3-4 example, future cash flows may be affected. And when future cash flows goes down, your value in use goes down. And when your value in use goes down, you have to book an impairment. Okay. So because of climate change, you have to book impairment because of these two major reasons. Now, one more thing. I still remember one question in 2010. It came in 2009 or 2010. It came in 2010 when there was a P2 paper. And the original name of that question was Scramble. Original name of that question was Scramble. I don't know this question is still in your kit or not. I think it's with a different name. Now they have changed the name, but the original name was Scramble. And you know, in that question, there was one basic thing was tested. Listen, whenever you book impairment in any CGU, you have to disclose the reason of that impairment. Why this impairment happened? Shareholder wants to know why this happened. Why this sudden 30% downfall impairment you are booking. So you have to write the reason of impairment. That the reason of impairment is pandemic. Reason of impairment is earthquake. Reason of impairment is changes in usage pattern. Reason of impairment is change in use of asset. Anything. So you have to write the reason. So now listen, read. In disclosure, you need to write the reason of impairment. And now the reason of impairment could be climate change. Now the reason of impairment could be climate change. So don't forget. Now this climate change will impact your disclosure side of IS 36 as well. And dear students, listen, whatever I'm saying, this is all I'm giving you material in your mind. I am giving you data in your mind. These all points you can write. These all points are valid. You can write in your exams. To be very honest, it's getting inside your mind now. Next is IS 37. Yes, IS in some, because of climate change, we may get some penalties from government. Like we promised government that we'll shift to the solar. But we didn't shift to the solar, so now government will do penalties. Okay, or if we are not involved in environment friendly things. If we are not involved in environment friendly things, so we may get penalties, and penalties are linked to IS 37. Second example, which I have already told you. is about decommissioning liability. Decommissioning liability, or some people call it compulsory disposal cost. So yes, because of climate change, there will be hit on compulsory disposal cost as well, right? Now the next thing is IFRS 9 financial instruments. IFRS 9 financial instruments. Yes, you have done special impairment rules. Stage 1, stage 2, stage 3. Stage 1, stage 2, stage 3 expected loss model. So yes, because of climate change, as we have already listened, that people goes bankrupt because of climate change. There is a downfall in the businesses. So now if I have given loan to somebody and the opposite side guy got bankrupt or the downfall in business, so yes, I have to book impairment. So again, IFRS 9 impairment scenarios will be active. You can read. Number 2, the classification and measurement of loans may be affected. Include terms of linking contractual cash flows to an entity's achievement. Yes. Now wait. You know, just close your eyes and think about financial asset. Financial asset. If you invest in debt market means if you give loan to somebody. Debt market means if you give loan to somebody. So you have three categories. You have three categories to classify in. Amortized cost. You have three categories for debt market if you are an investor. The one is amortized cost. The second one is fair value through OCI. And the third one is fair value through PNL. I'm sure you guys know this. You have done the course. You have done the course. Amortized cost, fair value through OCI, and fair value through PNL. In amortized cost, we studied two tests, business model test and contractual cash flow characteristic test, right? Okay. So now use your brain. Because of climate change, there may be a change. There may be a change in future cash flows. Future cash flows, like the guy who took loan from us is saying, I can't pay you fixed amount now. I can't pay you fixed amount now. I will only pay you the amount if there will be no rain, or I will only pay you the amount if there will be a rain. So now open your eyes, don't sleep. Now your future payments are dependent on some variable. So that's, there is a derivative. There is a derivative in the deal. There is a derivative in the deal. So now you can't record it at amortized cost. Now you can't record such loans on amortized cost. So there is a classification change. There is a classification change may happen because now there is an embedded derivative. Now there is an embedded derivative in the deal. Yes. One more area. You know, if you think about cash flow hedge, in cash flow hedge, we normally do cash flow hedging for highly probable. Remember this? Highly probable forecast transactions, highly probable forecast transaction. And in cash flow hedge, normally, open your eyes and brain, please. In cash flow hedge, normally the hedged items comes in the future. Hedge item will come in the future. Right now we have only hedging instrument. Right now we have hedging instrument. And why did we enter in hedging instrument right now? Why did we enter in hedging instrument right now? In order to hedge the risk of that future hedged item. Okay. So now just use your brain. Because of climate change, there is a possibility you will get a U-turn. You change your plan. You said, no, I don't want to buy. I don't want to buy that future highly probable forecast transaction. So now there is a topic which we call discontinuation of hedge accounting. There is a possibility of discontinuation of hedge accounting because of climate change. See, because of climate change, this may impact your hedge accounting as well. Use your brain. Now, IFRS 13. IFRS 13. Now, you know, because of climate change, people leave the country. Yes, because of the climate change, there is a flow of people from one country to another country. So there is a change in demand. There is a change in demand of properties and everything. Yes, it may hit your tourism. So if there are no tourists, so no demand of many things. Just think about the economies which are dependent on tourism. Just think about the economies which are dependent on tourism, my dear students. So in that case, the fair value of assets will go down. The fair value of asset will go down. So yes, IFRS 13, we use IFRS 13. And if these things happen before the year end, so yes, we have to see things at the measurement date in the definition of fair value. In the definition in the definition of fair value, it is written at the measurement date. The last three pieces, the last three words of fair value definition is measurement date, that we have to see the factors at measurement date. So those announcements which came, those announcements or those events which happened before the measurement date, yes, we have to take the impact of those things. Yes, we have to take the impacts of those things in the fair value. So obviously this climate change thing is affecting IFRS 13 as well, and the fair value of many things. Okay, so this was the article written by the examination team. I've already given you 35 minutes discussion. It's more than enough, more than enough. I've given you many examples, and I request you all to read it once again. Read it once. So this looks like a hot issue. It may come. Okay. So now we are moving towards a past paper, and as the tone of today's class going towards the current issue, so I have opted question number 4 of recent past papers, because I don't want to discuss any IS, IFRS or number crunching now, because there is a yes, I'll send you the article, don't worry. I'll send you the article. Somebody's asking the article, I'll send the same article. Listen, so except one thing, that there is a lot of general discussion. There is lot of general discussion in SBR paper, and you have to make habit for that. Even one student before the class messaged me to share some strategy. So I would recommend you guys that 5 days or 4 days before the exam, stop writing, stop doing even typing, stop typing, even leave the typing as well. Just do reading, reading. Exam kit reading with solution reading, exam kit solution, past paper solution, articles, non-stop readings, only. So these words, these techniques will come in your mind, that how to write, how to speak in this environment, right? It's like speaking. When you go to a foreign country and you don't know, you're not expert of that language, but when you start speaking with the people of that country, after some time, it becomes normal. You understand their style. This is the game, right? Now, this is question number 4. This is question number 4. This is question number 4 of Wincom of March, June 22 past paper. Okay. Wing company manufactures textile products and is currently assessing the impact of global pandemic on its operations. The financial year end of the company is 31st December X8. Now, the following exhibit available on the left hand side. Obviously, I have typed this question. In the exam, you see the question in the pieces of exhibit. You see the question in the form of exhibits. Okay, so I've just typed it. Now, impact of pandemic describes the impact of pandemic or certain aspects of Wing company's business. There are, I hope you can see the screen carefully. There are several measures taken by government and banks in the jurisdiction which Wing company operates in to provide relief for companies which have been negatively affected by the pandemic. Yes, this is very common. We have seen, especially in 2020, even in 2021, Australia, Canada, USA, UK, especially these countries, they gave extraordinary grants to their people. Extraordinary. Even they distributed so much money that after the end of this pandemic, people were not willing to work. Nobody was willing to work. Even they were out of practice. This thing we have also seen. Okay. So they helped businesses a lot, and they gave a lot of tax reliefs. They gave physical money. Even they gave you 50% salary of your employees. Like, don't fire your employees, take 50% salary from us. Lot of different types of things. Now, the business reduction loan scheme provides lender with a government guarantee of 90% on each loan to give lenders confidence in continuing to provide finance to companies. Yes, yes. Like the government gave 90% guarantees to bank. Okay, give loan. We are responsible. We are responsible. The National Bank is also buying short-term debt from companies. Yes. For example, if you have a loan, this bank will buy your loan. That means you can shift your loan to the bank. So these all are the favors given by the government just for the survival of the economy. Wing, this first paragraph is total general discussion. This first paragraph was general thing, which is of the knowledge of each and every student, everybody who is living in this world. It's normal thing, not an extraordinary thing in this first paragraph. Wing company has a history of profitable operations. This is a positive point for Wing, and relies on external financing resources. This is the technical point. Listen, as this company is dealing in textile. Now, wait. You are not doing F3. You are not doing foundation level or O levels or basic paper. You are doing director level paper. So at least you must know if you read the name of the sector, you should think the real life scenario. Just think, textile sector was a loser or winner in pandemic. Tell me, textile sector was loser or winner in the pandemic? Write on the comment section, please. Very good. Very good. Yes, loser, not winner, not winner. Technology sector was winner. Yes, online things, remote-based works were winner. Biotech, healthcare sector was winner. They earned a lot. But this textile was not. Why? There are many reasons. Because the whole world closed, so nobody did shopping. And as the new culture started, work from home. So now work from home, no need to do makeup, no need to change clothes, no need to spend on brands. Just think. So this is negative for textile sector, this pandemic. Okay. So it's okay, the history of profitable operations, but we are talking about present and future now. And secondly, they are relying on external financing sources. So now those who are providing finance, they also living in this world. They also living in this world. So they also know the reality. They also know the reality of textile sector. So there is a possibility that now in future the external finance provider won't trust us. Yes, there is a possibility. Wing company has taken advantage of the government support measures, right? This is very good. However, its operations have been temporarily suspended before and after the reporting date at 31st December X8. This is evidence. See, this is evidence that we are not working good. This is evidence that we are not working good. Wait. In this question, in the requirement, you will find a going concern issue. 1 5-mark part is for going concern discussion. So yes, this is a very big evidence that there is a company is in severe difficulty, that operations are temporarily suspended, or we call it closed. So yes, this is an evidence that there is something bad. The impact of the pandemic has created circumstances which change rapidly. Yes, we have seen. Even in pandemic, after every 3 months, every 6 months, we were waiting for a new wave. Remember, many waves came of COVID. The pandemic has significantly affected the global supply chain. Yes. The supply chain got choked, and that's because of that we found extraordinary shortage of inventory in developed nations. And yes, because of this shortage, this choking of supply chain, the freight charges increased a lot. Like when we used to pay before 2-3 years, we used to pay $1,000 for a freight charges, and then it shifted to 10,000 US dollars, something like that. Wait 30 seconds. Azan is going on. 30 seconds. Okay, now listen. So Wing company has several contracts to sell goods at a fixed price. Because of the shutdown of its manufacturing facilities as required by the government, it cannot deliver the goods itself without first buying them from a third party at a significantly higher cost. Now wait, you remember the thing onerous contract, onerous contract we teach in F7 as well, in SBR as well, and it's in IS 37. What is onerous? What is onerous contract? You know, the unavoidable cost. First of all, the contract has been signed. The contract has been signed, and now the future economic benefit is less, and the unavoidable cost is higher. So now you need to book. You need to book provision for this loss. Why do we need to book? First question, why do we need to book provision for onerous contract? Because the present obligation has already arisen. Why? Because we have signed the contract, so now we are bound. That's why you have to book the provision. And I'm sure you know onerous contract accounting, you have to book lower off. For example, you have two options. Number one, if you continue with the contract, you have to bear the loss of 10 million. If you continue with the contract, you have to bear the loss of 10 million. But if you cancel it, you just have to pay 7 million penalty. So now at one side, you have to pay 10 million, and on the other side, you have to pay 7, and you have to opt one. So obviously, we'll go for lower off. Obviously, an intelligent person will go for lower off. Okay. And that's what the instruction of IS 37. So this paragraph is related to onerous contracts. See, normally, if Wing company terminates the contract, then it incurs a penalty. Okay. Exceptionally, some contract can be cancelled without paying compensation. So such, if there is no compensation, then it's perfectly fine. If there is no compensation, then the contract is not onerous. Please, But if yes, there is a compensation which you have to pay, then it's you have to book provision for onerous contract. Okay, so the free 4 marks you will find with this paragraph. The free 4 marks you may find with this paragraph. Right now, Wing company has several investment properties. Investment properties IS 40. You have what properties for rental earnings, which it measures at fair value. Okay. In accordance with IFRS 13 fair value measurement, the pandemic has significantly affected the market price. We all know this, of these properties. Okay. Now, see, IFRS 13 is also linked in this question. The directors of Wing company are of the opinion that the market is undervaluing its properties and have therefore decided to disregard market prices at 31st December exit. Wrong. Wait. First thing, now don't sleep. First thing, we have in IFRS 13 entity-based factors. What is the heart of IFRS 13? If you have studied from me, I've emphasized this thing many times. In my many past papers, in my original lecture, I always emphasize on this. IFRS 13 discourages entity-based factors. It promotes market-based factors. Very good, right? So now you have to see the behavior of market participants, not your behavior, market participants. And yes, market participants have started selling. There is a low demand and high supply. So yes, the prices are down. People are buying for only less prices. So yes, the price accepted, the price is down. And this price is determined by the market. So now if you are following IFRS 13, you have to book at reduced price. But what this director is saying, no, we don't accept this market thing. We don't accept this market behavior. So that's your personal opinion. That's what this director is saying here. It's entity-based thing. An entity-based thing is no more effective now, no more acceptable. You have to record it at reduced fair value. And yes, in IS 40, changes in fair value goes to P&L. In IS 40, changes in fair value goes to P&L. Now, next. The directors claim that some of the market transactions are not representative, as they are based on transactions which are forced due to cash flow problems of the vendors. Now wait. You know what is forced sale? You know, there is a word orderly transaction in the definition of fair value. Look at here. In the definition of fair value, there is a word orderly transaction. When you go to market to check the price, whenever a person goes to market to check the price, he or she has to pick that transaction in which there is no related party transaction, like between mom, dad, or parent or subsidiary, because related party transactions are normally not arm's length transaction. There is a perception. Number two, it should not be an urgency sale or forced sale. Forced sale means, for example, if somebody's family is not doing well, if there is an accident in the family, so somebody is selling the furniture at half price of this. Okay, so these transactions are not recommended. These are one-off transaction for sale. But because of pandemic, when people are getting bankrupt, just use your brain. When people are getting bankrupt, so it's the normal phenomena to sell your products at whatever price is available, because there is a shortage of liquidity in the market as well, because there is a shortage of buyers liquidity. So it's the normal behavior that prices will go down. So this is not that forced sale. This forced sale is by the whole market. This is the behavior of the market now. It's not by a single person. This forced sale is not by a single person. The examples given in IFRS 13, the examples given in IFRS 13 of forced sale is one-off example, like in the whole market, one or two guys are doing forced sale, not the whole market. If the whole market is doing this, then that's the part of market. That's the behavior of market then. Okay. The directors have indicated that they would not sell their properties in the current market. Okay. Okay. If you don't want to sell, don't sell. But still the fair value will be computed using the market participants' behavior. If you don't want to sell, that's your wish. Okay. But if you don't want to sell, still these properties will be reported in SOFP. Still these properties will be reported in SOFP. And you have in IS 40, if you are using fair value model, you have to report it at fair value. And if you want to report it at fair value, you have to use market participants' behavior. That's it. There has been a significant decrease in volume of the transaction in the property market. Now wait, discussion on active market. Discussion on active market. Active market is a market with frequency of frequent transactions, almost daily transactions, daily buying and selling, right? So if the transactions are not frequent, then the market becomes inactive. But still wait, you can use inactive market in level 2. Hope you remember three levels of input: level 1, level 2, and level 3. Remember? So in level 1, you take identical, you take active quoted prices from active market of identical goods or identical shares. Like in level 1, you don't need to use the calculator. In level 1, no adjustments are allowed. Just take the fair value from the market and fix in your SOFP. The best thing. Don't use your calculator. But my dear students, in level 2, if you don't have active market, the market is inactive, or you are using the similar assets. There is a difference between identical and similar. Give message to your brain. Think over it. There is a difference between identical and similar. So if you are dealing in similar assets, so you need to do certain adjustments, like real estate. In this question as well, and you know the real estate, normally we use level 2 for real estate. All homes are not same. All 500 yards homes are not same. There are certain differences. Some contain swimming pool, some contains garden, or some contains steam sauna, jacuzzi, blah, blah, blah. So there are differences in useful life of homes, or old home, new home, many things. So you need to use your calculator. So normally for property market, level 2 is recommended, because you have to adjust things. Okay. Now, however, see this, however, several properties similar, see the screen. However, several properties similar to those held by Wing Company have been sold in December X8. Very big evidence. Very big evidence. Now, what's the problem? Why you are saying the market is inactive when you have recent transactions? When you have recent transactions of properties similar to your property, so it's better you take the fair value of these properties as an input, and then use your calculator for any differences. Use your calculator, do some adjustments. So there is no need to go for level 3. Level 2 is there. No need to go for level 3. Level 2 is there. Level 2 is there. Okay. Now, let's read the requirements. And make up your mind. General discussion. General things are also there in your paper. So you have to write very simple logical things. With regards to wing companies financial statements, with regard to wing companies financial statement for the year ended 31st December X8, discuss the impact that pandemic and subsequent events will have on: number one, the assessment regarding to wings company's ability to remain a going concern. To remain a going concern, you know better these things. That yes, you have to connect also. You have to connect with this question also, but in the beginning, you have to write general discussion as well. 2, 3 lines, 4 lines, you write state the rule. Okay, 2, 3, 4 lines, you write state the rule. Now, I have not made a formal solution. I just made some pointers. Some pointers, you can write it now yourself. You can send me the answer. I'll check it out. Don't worry. Okay. So I have made certain pointers for these questions. Now, first thing, if you have studied the framework, conceptual framework, in conceptual framework, there are certain things which are underlying assumptions. There is a heading of underlying assumptions. And in underlying assumption, there are two things: matching concept and going concern concept. What does it mean? It means it is assumed that without matching principle and going concern principle, nobody can make the financial statement. Nobody can make the financial statement. Nobody can make the financial statement, right? So first thing you have to tell to the examiner that framework in the underlying assumptions of conceptual framework, going concern issue is written. That without going concern assumption, nobody can think of preparing the financial statement. Number two, it is presumed normally whenever we pick any financial statement, whenever an investor picks any financial statement, he thinks, yes, the business is continued. The business is continued. If this is not the case, that there are some uncertainties, first thing, uncertainties related to going concern, or there is some serious issue that the company will be closed with very soon. So in that case, first of all, you have to use certain disclosures of IS1, or if disclosures are not enough, then you have to prepare financial statements on breakup basis. Then you have to prepare financial statements on breakup basis, right? Then going concern assumptions tell you two things: ability and intention. Ability and intention. Okay, now listen, look at here. If you go to the basics of going concern concept says that it is the number one, the ability of the management and the intention of the management to continue this business for foreseeable future. Foreseeable future means 1 year. Foreseeable future, the description of foreseeable future is 1 year. That means you have the ability plus you have the intention. Wait, both things are very important, but without ability, intention is nothing. Without ability, intention is nothing. Giving you one example. For example, I had 5 assets. One car, one plot of one piece of land, one mezzanine floor, one shop, and one house. Five assets. Now, I was extremely in the loan burden. So I started selling my assets. First, I sold my shop. Then I sold my plot, piece of land. Then I sold my house. Then I sold my mezzanine floor. Now the last asset, that car is left. Now the last asset, that car is left. And now I'm saying to the whole world, I have no intentions to sell this car. I have no intention to sell this car. So the lawyer will say, your intention is no more valid because this is the only thing is left with you. You have to sell it because you have to pay the loan. That means intention is not everything. Ability is must. Without ability, intention is nothing. Without ability, intention is nothing. So ability is very important, right? Then now the next very important thing which you can write in the exam is 12 months. Foreseeable future means 12 months. So from which date we have to check this 12 months? From which date we have to check this 12 months? Not from the reporting date, but from the date when the financial statements are issued. When the financial statements are issued, right? Okay. I'm sure you guys know the IS10 events after the reporting date. For example, the reporting date is 31st December 22. But you know, when the financial statements are authorized, this may be 31st March 23. Okay. So now you need to check these 12 months from this, when the accounts have been prepared, when the accounts have been prepared. Okay. Now let's connect the dots. We have to connect. The main important thing is the connection. You know, do you think this wing, the name of the company was Wind Company, or what, a wing company something? Do you think this wing company going concern status in doubt? First of all, as the going concern is not an easy issue, it's a packet of uncertainty, and in the end, still in the end, you can't write any single line for that. No more proper conclusion, just you can discuss this issue. Listen, the positive point is that government help was there, and yes, banks relaxation, right? Yes, you have to check the cash balances and upcoming funds, the cash flow forecast of the company, that how much is there any possibility that company will be running out of cash? This thing we have to check. Should account for company's operations of and before. Yes, see this. One point is negative for this company, that company's operations are suspended before and after the year end. This is a very negative point. Operations, if you shut down your operation, then there is a doubt on your going concern status, right? But yes, what's the positive point? The past of the company was highly profitable. The past of the company was highly profitable, but again, that was past. But one thing I can add, listen, because of a very good past, the owners or the company, you can say, made a very good money in the past. So there are people I have seen and you have seen in this pandemic, although they are in losses, but still they can survive. Although they are in losses, but still they can survive. Now I can tell you one story of my friend, last 10 days before, I think, or like 15 days before. Wait, before 15 days, in our countries, there was a lot of uncertainty on many businesses. Import related businesses, there were high level of uncertainty. So I met a guy and I said, what's your plan for your business? How are you feeling with your business? So he said, no issue. And you know what he said? He said, in past, we scored 18 runs on one ball. Normally in cricket, you can score 6 runs. In cricket, you can score 6 runs in one shot, right? He said we were on extreme profits, extraordinary profits, that we used to score 18 runs on one ball. Just he was giving an example. So yes, we can survive. He said we can survive years, no issue. So this is also a point. This is a reality-based point, that if you have so much retained earning or past earnings from your past operations, or sometimes you have so much cash that you invested in the banks or stock market or fixed income, and you get a very good investment income. And that investment income may protect your operations. Although your operations are not good, but still you are a big giant, you can survive. So these points are also valid for going concern, right? You keep these things in mind, how to discuss it. Then investment properties values. Yes, this is a negative point. That their properties values are also not down. Liquidity and profitability should be checked. Yes, normally auditors check this for going concern thing. Past operations, past operations, past operations were profitable. This is good point. I just told you, positive point. And judgment and uncertainties should be checked on continuous basis. This is for especially for pandemic. In pandemic, after every 2 months, 3 months, new announcements we saw. We saw the progress of vaccine. Remember those days? A new announcement of vaccine, new laws of tourism, new laws of traveling, lot of things. So these things impact a lot. These things are impact a lot on going concern. And yes, let me share one practical thing, because this is practical paper, so it's excellent if you think practically. You know, recently, because of extraordinary high inflation, look at me. Let me go start with basics. Wait, you know, there are many brands like Zara, River Island, Next, or many Calvin Klein, extraordinary, lot of brands. Their productions, they do their productions in developing countries. They do their production in the countries where the labor is cheap, like Pakistan, Bangladesh, India, Vietnam, right? So especially in Pakistan, we have some exports related to textile. We have exports related to textile. Okay, you getting? But recently, because of very high inflation, the government of Pakistan increased the rates of electricity extraordinary, skyrocketing, rocket high electricity. So now, if somebody is doing production in Pakistan, if somebody is doing textile production in Pakistan, so the textile manufacturers saw this thing, that by manufacturing a certain product in Pakistan is costly. It's better we buy a ready-made and we buy ready-made. You have studied this thing in your F2 paper, cost accounting. Buy or manufacturing decision. I am sure. So many factories got shut down. They said it's better we buy ready-made and we export. We buy it from somebody else and we export. It's not worthwhile to manufacture, right? So this is also issue. That's why many factories got shut down. So this inflation was also a continuing effect of pandemic. Why? Because in pandemic, first of all, there was an extremely low demand. Everything got shut down. But once everything started opening, so automatically there will be an abnormal rise in demand. So because of this abnormal rise in demand, inflation is there. Okay, one of the reason of inflation. Other reasons are different. Did you understand the points? Please write. Did you understand the points? Please, students, write on the chat box. Now, the second part is extraordinary easy. Just 5 minutes part. See, accounting for onerous contract. I already told you onerous contract. Listen, first of all, in this, how you have to write the definition of onerous contract. You have to write the definition which I told you. The future contract signed plus future economic benefit is less than unavoidable cost. Okay. Then you have to write the application. In onerous contract, you have to book the provision for lower of two things. First option, the second option is penalty. Whatever is lower, you should go for it. Okay. Then now you have to write the story of this question. I have told many times in my classes, what is the difference between ICAEW and SBR paper? What is the difference between ICAEW corporate reporting and ACCA SBR paper? Listen, in ICAEW corporate reporting, you take open book with you. You take exam folder with you. It's allowed. It's open book exam. So you write from that exam folder. In ICAEW corporate reporting paper, you write from your exam folder. And in ACCA SBR, you write from the question. You write many things from the question, like copy paste. This is for sure thing. Many examiners, many markers have suggested this thing. You have to copy things from question, right? In SBR, ACCA, it's for sure thing. So now you have to write the story of question. What was the story in the question? What is the story? Listen, that we have made some contract with people that we'll give you in fixed price. We'll give you in fixed price, and then let us say those contracts are non-cancelable. But suddenly now we can't. Now we don't have the facilities to manufacture. We don't have the facilities to manufacture. So now because there is no staff. Just think, because of pandemic. So now what option is left? We have to fulfill those agreements by buying the products, and at heavy price and sell it at less price. So there will be a fixed loss. There will be a confirmed loss. Now, how can we avoid this loss? The first thing, we just cancel the contract, and in some contracts there are no penalties. So in those contracts, when there are no penalties, they are no more onerous. But in some contracts there are penalties. So in that contract, you have to see whether the penalty is bigger or the loss amount is bigger. Okay, whatever is the lower amount, you have to make the provision for that. Very simple. This is thing. 4 marks discussion. Next, now what they are saying, the fair value measurement. Discuss the impact of this all situation on fair value measurement of investment property. Now, how to write it? Even I've discussed this while reading the question as well. While reading the question, I discussed these issues. Now, how will you write? The first thing, you have to write the definition of fair value. It is the exit price to sell an asset or transfer a liability in an orderly transaction between market participant. Remember that definition you have to write. Then you need to define the orderly. Then you need to define the orderly transaction. Orderly transaction means there is no more related party. Don't pick up the sample with related party transaction. Urgency sale, force sale, remember? And then unit of account must be appropriate. Unit of account must be appropriate. You know the lectures, please. Okay. Now let's start connecting. If market participants selling for less, it does not mean they are forced to sell on less. Wait. Forced sale is something related to a single person. That one of the market participant, one of the person is doing forced sell. So don't pick up that example. But if the whole market is in tension, if the whole market is full of bankruptcies or full of tension, then everybody will sell. Now this is the market behavior. This is the perception of the market that now everything on sale. The confidence of the market is down, right? So this is not whatever written in this question. This is not forced sale by a single person. So yes, this is the behavior of the whole market. Now you have to discuss the major point, that as the director is saying in this question, director is saying we don't accept this market. We are not going to sell our property in this market. So it's okay. You don't sell, but still you are using IS 40 investment property model. You are applying IS 40 investment properties on these properties, and you are using fair value model. So at the year end, you have to book your properties on fair value. And yes, for fair value, IFRS 13, you have to follow. And IFRS 13 clearly says to promote market-based factors and discourage entity-based factors. So if it is your wish that you don't want to sell, then this is entity-based thing. Then this is entity-based thing. Now, next issue. As the volumes are down, okay, this is an hint of inactive market. This is the hint of inactive market, but still we have three inputs: level 1, level 2, and level 3. Level 1, we cannot think of applying here. Level 1, for level 1, identical products must be there. Identical products. An active market with quoted price. Remember, unadjustable. No need to do any adjustment. So level 1 is not possible, but for real estates and property market, level 2 is better. Level 2 is better. Also, several properties, the last line of the question, you remember? Also, several properties similar to wing companies sold in the last month, which can be used as an input with adjustment. Yes, it was written in the question. It was written in the question that several properties similar to our property was just sold in the last month. So these transactions, these few transactions are indication that there is a market. There is a market. Okay. So when there is a market and we have the similar properties, so better use those prices and do some adjustment. Better use those prices and do some adjustments. Still, this is better than level 3. You know what is level 3? In level 3, we take unobservable inputs, which we can't see, the future cash flows, the present value of future cash flows. So that's not recommended. Even, you know, there are 3 levels. The first one is level 1. Always go for level 1 first. And if level 1 is not possible, then go for level 2. And when level 2 is not possible, then go for level 3. The very least likely, the less recommended level is level 3. Level 3. Don't go for level 3 if you have level 2 possible. And even, you know, you have studied the IS, with level 3, there are high level of disclosures. With level 3, there are high level of disclosures. So in this question, there is no need to go for level 3. Level 2 is the best solution. Level 2 is the best solution for this question. Okay. So in this way, you need to discuss these issues of fair value. Now, the last thing, discuss, see the question, please. This is the last requirement, okay? Discuss the nature of the information that investors of wing company will expect to be disclosed in the financial statements. Discuss the nature of information. As in, just be an investor. All of you be an investor. What you expect, what information you expect from in the financial statement as a result of pandemic. You are an investor in this 2020 of 2021, 2022. Now, what you expect from the company? First thing, candidates should include, amongst other things, such factors as disclosure of uncertainties. See, the examiner is giving you hint. Events after the reporting period, government measures and covenants. Government measures and covenants. Okay, these things you should include. Now, let's start. First of all, keep this pandemic aside. If it is a climate issue, if it is a war issue, if it is a pandemic issue, all investors want clear communication. They want clear communication. They want each and every information to be understood clearly, like the risk related to those transactions, the impact, the future impact. What is the future impact of this transaction? Because yes, stock market works on future. It's the share price is future looking. So these things are normally demanded by investors. Yes, one more thing. Explanation on unusual items. Yes, this thing investors ask a lot. So this is the first beginning point you can give. Then because of COVID, because of pandemic, we have to change our accounting policies, or we have difficulties in applying accounting policies. So if we have changed our accounting policies or any judgments used to apply accounting policies, you have to make disclosure on it. You have to make disclosure on it. Similarly, wait, there are companies, they change their materiality levels. Previously, because of high profitability, their materiality level was different. But now after COVID, they got such a big hit. That now their materiality levels are revised. So do inform this thing to your investors. Do inform these things to your investors that your materiality levels are revised because of COVID, because of pandemic, so that now they are be careful with the transactions, that what thing is material and what is immaterial. Okay, I have not written this point, but orally telling you. Then investors want to see the magnitude of pandemic on operations. Now, for example, a company is dealing in 5 products. There is a diversified companies. So first, hope you remember IFRS 8 operating segment. Company has different operating segments. So what impact on each segment will pandemic produce? You have to write. For example, we are dependent 80% on textile and 20% on technology. For example, we have 2 segments, 80% textile and 20% technology. Because of COVID, because of pandemic, technology sector is good, but it will have a negative impact on textile sector, and the major earnings is from textile sector. So it's worrying for investors. So we have to write the magnitude. We have to explain the magnitude. Okay. Now, also they want a system. They want a system of reporting. That after pandemic, how you will report these things. What is your system? Like I taught you in climate change. In climate change, they want metrics. They want certain KPIs. They want certain KPIs which they want to measure, right? One more thing you can add here. You remember APM? Additional performance indicators. So sometimes many companies, even this is reality, many companies added certain APM, they have properly added certain APMs because of pandemics, so that shareholders and investors can see the performance. Okay. They want a separate disclosure of assets and liabilities impacted significantly. Yes. In this way, you can also do reporting like those assets and liabilities which are impacted significantly. From now onwards, do some separate reporting for them. Giving you one very good example. Wait, you remember IFRS 13 disclosure site? IFRS 13 disclosure sites. There are certain transactions for which we have to calculate recurring fair value. And there are certain transactions for which we do non-recurring fair value. Even when I teach, I ask this question from students. Tell me, please write on the chat box. What are those transactions for which we have to calculate fair value every year? What are those transactions for which we have to calculate fair value every year? Tell me, recurring. Can anybody tell me? What are those transactions? Yes, very good. Investment properties. Investment properties are held for long term. So every year we have to report it at fair value. Last year that property was with us, this year also. Investment property, or second example, is long-term shares. Fair value through OCI, long-term shares. Last year it was there, it's this year also with us. Okay. Now, can anybody tell me the fair value of non-recurring transactions? Non-recurring fair value. Yes, IFRS 5, excellent. IFRS 5, one time you have to bring it to fair value less cost to sell. And the best example, one more best example, you all are omitting. Non-recurring fair value transaction. What is the best example? Best. You guys are on the last paper of reporting, strategic level, PhD level paper of reporting, please tell me one of fair value transaction. Can anybody tell me? No. Consolidation. 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 When parent company takes over subsidiary company, then at the time of takeover, one time you have to bring all subsidiary to fair value. Okay, so that's also a non-recurring fair value transaction. So the same thing here, investor is saying that now after pandemic, certain assets are shaky, so you have to report something separate disclosures for them every year, right? Same thing. Now let's do standard wise. Let's discussion stand do. You know, because of this pandemic, revenue accounting got affected, like variable consideration. You remember variable consideration, the penalty clause and the incentive clause. Even in the last class, I taught you this variable consideration. Remember that variable consideration can only be booked if significant reversal is impossible. But now, because of pandemic, now you won't be able to meet the targets. So obviously there will be reversal in variable consideration. Second, modifications. Because of pandemic, many contracts got modified. Because of pandemic, there are a lot of onerous contract. You just see these questions. Penalties, compulsory disposal cost will be affected. So all these things will affect your disclosure area as well. All these things, investors wants to know the details of all these things, because ultimately these things will impact your profitability. Ultimately these things will affect your profit and the EPS and the dividends. So yes, it is related. It is relevant for investors. Sorry. Then insurance claims. Oh, very important. Insurance claims. You know, it's very common that many people got medical insurance, but you know, we have seen that many insurance companies openly denied that if you got infected because of COVID, we won't give you any insurance claim. This is an abnormal event. Many insurance companies announced that this is an abnormal event. We are not going to give you anything. First example. So investors wants to know whether these losses, the losses which are in the income statement, the losses which we are expecting or which has already been done, can we get any compensation from insurance companies or not? This is relevant. So this explanation we have to give. To investors. One more thing, giving you one more examples of insurance claims. You know, when sometimes riots or something happens in any country, and because if they continue long, so you know, people started burning cars of each other. So I have seen this in past 15 years back. Once it was happened, unfortunately. So it was a 3-4 days continuous massacre and riots. So after the first day, insurance companies openly announced that now we won't be giving you any claim for your cars, because this is an abnormal event. Everybody is burning each other cars. So this is reality. Sometimes no, there is no IFRS 17 in our course. No need. Somebody is asking about IFRS 17. No, it's not part of the course. Leave it. Now, so sometimes insurance companies give special disclosures that for certain events we are not responsible, and you can read the insurance policy for that. Okay. Now, government loans, in this question, tax reliefs, deferred tax liabilities and assets should be booked accordingly. Yes. Government has given loans. What are the terms of those loans, the relaxed loans? What are the normally government has made some payments to help give grants to the companies, tax relief to the companies. You have to write on that as well. One thing I would like to tell you, very interesting thing, even Sometimes I teach this in my normal class as well. Listen, and there is one article for that as well. You know, look at here. This is P company and this is like B company. We have P company has taken 5% shares in this B company. Now, before the year end, B company declared dividend. B company declared dividend, so we'll make the entry retain earning debit, dividend payable credit, dividend payable credit. Now, as P company is the shareholder of B company, P company holds 5% shares. So now when B company will declare the dividend, now P company has the right to receive dividend. So P company will make the entry. P company will make the entry dividend receivable debit. This is the old thing. Dividend receivable 50,000, let us say, and P&L credit 50,000. So this P company has just booked dividend income. This P company has just booked dividend income in the accounting income statement. Now P company will go to the tax department. P company will go to the tax department and say that please take tax on this dividend income. Now tax department will say no, we don't want any tax now. We don't want any tax now. We will take tax from you when you will receive the dividends in future. We will take tax from you when you will receive physically these dividends in future, because the tax department says deferred tax is taxed on cash. Sorry, dividend income is taxed on cash basis. Dividend income is taxed on cash basis. So next year you will be taxed. Okay. Now just think. Right now the tax rate is 30%, but the government has given us tax holiday next year. Government has told us that whatever will be your income next year, you just have to pay 10% tax. You just have to pay 10% tax next year. Now all of you tell me, will we book deferred tax of 30% or 10%? Will we book deferred tax of 30% or 10%? Very good, 10%. Because we have to pay this transaction in future, and we have to pay according to the future tax rate. So if we exactly know the future tax rate, then yes, IAS 12 says use that tax rate. Are you getting my point? So this thing can be linked with pandemic. This thing can be linked with pandemic, that because of pandemic, government has announced tax relief in advance, that for next year, after that year, this thing will happen with you. So this is linked to our topic. Now, last point. The last point was the first point of my topic. It should be the first point of my topic when I started the topic, that we are in textile. We are in textile. Okay. So now sometimes we do commitment with investors or with our clients. You know, like if I'm in Bangladesh and I have a factory, so my clients are in UK, because I have to do production for UK clients. Okay. So sometimes we have commitment with UK that we'll produce in normal operations like running a factory. But because of COVID, we have to do remote working. And lot of things. And I've already told you that textile guys are losers because of the less demand, right? So this thing you need to disclose, that textile is no more a winner. In the disclosure sections, you have to report to your investors that textile is no longer a winner. First thing. Second thing is that sometimes we do commitment with our investors that we'll do our normal operations, but because of pandemic, we can't hold normal operations, and we have to do remote working as well. So this thing you should disclose. Now, investors need redundancy and closure of business segments. Yes, information. This information also they want. Because of COVID, this was the first thing we remembered in March 2020. Each and every month we used to listen this news that Emirates fired this much people, this airline fired this much people, this hotel fired this much people. So yes, they are interested in redundancy and business closure things, general thing. Now, in pandemic, biohealth, remote based and tech based, yes, health related stocks, technology stocks, and remote based stocks, remote based things. Industries got benefit. Investors may shift from textile to other sectors. This thing you can also write. Okay, this thing you can also write. Even I told you about these three sectors in the start of the lecture. In the start of the lecture of this question, I told you about these three. Yes, in case of redundancy, sometimes we have to make restructuring provision. Very good. Restructuring provision, and you have to follow the proper rules of restructuring provision accounting. You are correct. Somebody has just commented. Okay, dear student. So I again say, see, this was the recent past papers. These type of discussion, we normally, if you follow the international news, if you follow the international articles, you find these things in international articles as well. So these things are, you have to write, like 20-25 marks of the paper is now linked to these things. So don't underestimate these things. Don't underestimate these articles. If you keep reading these things, these things will be easier for you. Okay, right? So be active on the WhatsApp group. Help each other. If somebody needs help, you should help. This will also brush up your concepts as well. Send me your scripts. I will also send you the mock exam today or tomorrow, right? Okay. Yes, somebody asked me about the difference of OCI and OCE. I'll also send you the article, but one thing keep in mind, OCI is the for the year thing, for the year, because OCI is connected to the income statement. Listen, OCI is part of income statement, is connected to the income statement, and income statement is always for the year, for the year, for the year. So OCI is the for the year thing. OCI is the for the year thing. Okay. But OCE is a balance sheet reserve. OCE is the balance sheet reserve, which is normally accumulated. And second thing, in OCI, we only record those equity changes in which owners are not involved, like revaluation gains of IFRS 9, IS 16, like that thing, IS 19, remeasurement components, right? Like foreign exchange operations, foreign exchange gain or losses. Remember of foreign operations? You remember that thing? So in OCI, we report those equity changes in which shareholders are not involved. But in OCE, remember that consolidation, sub to sub disposal, sub to sub cases, that also goes in OCE. So in OCE, we write all equity, all such equities, right? Still, I'll send you that article, right? So take care and goodbye. God bless you.